You see, everybody talks about saving your money, keeping it in the bank, and that's the best thing to do at times. But here is the truth of what happens to your money when you keep it in the bank. Craig Parker here, Parker's Property Sourcing, just coming at you with another video today. And today's video is about investing your money into property versus keeping your money in the bank. I'm sure a lot of you watching this video have been in a situation before where you've had a nice amount of money. It doesn't need to be a massive amount, but a decent amount of money, and you've kept it in the bank, and you look 3 months later and that money's slowly, less or slightly less or a lot more less. Because I've been there, and I know that a lot of people watching this video have been there. And then you look back and think, what did that money go on? What did I spend that money on? And the truth is that the cost of living in the UK is crazy high. Inflation doesn't allow us to keep our money in the bank. Low interest rates is what we get with our money being in the bank. Yeah. And it's taken me quite a while to realize it, and it's taken me to have a lot of money and then not have a lot of money and then have a lot of money again and invest it this time instead of just leaving it in the bank and getting a low interest rate on it. And I can speak from experience and say that putting my money into property, one, gives me a monthly cash flow, and two, my money that I've put in there grows through the capital growth as well, versus putting my money into the bank and leaving it in there in a savings account, for example, getting a real small interest rate. And then when things pop up, because life happens, and when things start popping up and your exhaust goes on your car, or your roof is damaged, or you've seen a nice holiday that you want to go on, that money gets spent. But if it's in property, it's so much harder to spend. It's just growing, it's compounding month on month, year on year. It's compounding, and that money that you put in there is going to be worth so much more when you finally, if you ever, take it out. And on top of that, like I've said, you're getting a monthly income if you've invested correctly as well. So we need to really start thinking, when we've got into some money, or when we've saved our money, how can we get our money working for us, as opposed to putting it in a bank and being tempted by this world we live in, where as soon as you open your eyes, you're spending money. You open up TikTok or YouTube or Instagram or Facebook, and there's an ad to spend money. There's a little gadget or something, We really have to start being smart and frugal with our money. And the best place to put it is in property. Now, don't get me wrong. I'm not saying don't keep any money in the bank, because, it does make sense to have, a little fund there just for emergency. Whatever that number is, could be 2 grand, could be 5 grand, could be 10 grand. That's fine. But anything other than that, your emergency fund, or 3 times your monthly outgoing saved in the bank, I'm not saying you can't have that. That's smart. That's something you should do and have there. But above that, after that, that money needs to start working for you. The way that people build wealth, and the wealth creators, they have their money working for them. They don't work for the money. So this video today was a nice, quick, short one. And it's all about getting our money working for us. Money in the bank versus money invested in property. There is one clear winner every day of the week. So my advice to you guys, and my positive words to you guys are, get your money working for you. Get that money put into property. You'll get monthly cash flow from your investment, and you'll also get the capital growth compounding on a monthly, yearly, basis, which will help you build wealth for the future. Hope you enjoyed this video. I've been Craig Parker. Till next time.